So you find an ETF that you really like, you head to Yahoo Finance, you head to Reuters, and you figure out that the management expense ratio is a very affordable price, and you buy the fund. The only difficulty here is you might be paying much more than it actually looks. And I'm going to go into a very important metric you need to be looking at with ETFs before you buy to make sure that you are not paying way more than it's cut out to be. I'm going to dive into this metric. I'm going to go over what the differences are between the management expense ratio and this metric, and I'm going to highlight what you need to do before you decide to buy any particular ETF, especially when it comes to looking at fees. As always, everybody, if you appreciate the content, like the video, subscribe to the channel, comment down below. Let me know if you knew this metric before and whether or not you look at it before you buy ETFs. And as always, 3 stocks in the description, absolutely free. Takes you 2 seconds to get them. They're some of my top options for 2025, and let's get right into it. So, as ETF investors, we know that fees are very important, especially in this highly competitive environment. So we're looking to grab funds that generate us maximum performance while paying the least amount of fees. However, the only difficulty here is there is some hidden costs behind particular ETFs that I would say 90%, at least 90% of investors don't actually look at, and some of them are absolutely drastic when it comes to your returns. Now, the management expense ratio, which would be the metric that the vast majority of ETF investors look at, would cover the management and administrative costs of running that fund. If the fund utilized leverage, that would likely be tucked in there as well, the cost of the leverage, things like that. And overall, you're going to get a pretty generic amount of what a fund is going to cost you every single year as you own it. But there's a particular difficulty here among ETFs that use derivatives, ETFs that are actively managed, ETFs that utilize covered calls, things like that. And that is the trading expense ratio. This is a ratio that very, very few investors actually look at, and sometimes it can be substantial when it comes to an overall ETF's fees, and they are not included in the management expense ratio. You are not going to see this on any data aggregation site, and I'm going to show you right now what I mean. So we hop on to HXS. This is a Global X S&P 500 corporate class ETF. And this is an ETF that is seen as a very tax-friendly fund in a taxable account because it does not pay dividends. Instead, you get the the returns of the S&P 500 lumped into this fund, and it's returned as capital appreciation in the net asset value of the fund. Now, on the surface, this fund's MER looks very cheap. I mean, we can even head to a platform like YCharts to look at hxs.to, and you're going to see a very low management ratio, 0.11. This seems like a slam dunk, especially considering the tax benefits that it offers. And don't get me wrong, I do actually believe HXS is a very solid ETF. It's just this is not what you are going to be paying to own the fund. And what you need to do, you need to come to these websites, you need to head down here to the ETF fact sheet, and you have to look at this before you buy a fund. So we're going to come here right at the top. We're going to see the management expense ratio 0.11, but this does not tell the entire story. If we actually scroll down to the bottom of this document, we're going to see something that is called the trading expense ratio, the TER. So this is going to be in the total cost area of the ETF. So we come down here, we have a management expense ratio of 0.11, very cheap. We have a trading expense ratio, which would not be covered on a lot of data aggregation websites, and that pushes the total fees to 0.4%. So you would think on the surface, if you just looked at Yahoo Finance, you would think, okay, 0.11%, I'm going to pay $1.10 for every 1,000 I have invested. However, the actual amount you're going to pay is $4 per $1,000 invested. It says it right here. This equals $4 for every $1,000 invested. That is because the trading expense ratio covers all of the costs the fund needs to actually trade. We're talking brokerage commissions, that could be the spread between the bid and the ask, and there's a whole bunch of other transactions, especially when you start getting into derivatives, that will push these fees up. Now, in the case of HXS, the trading expense ratio is this much higher because of the swap contracts that it gets into with the institution. So that is where this fee comes from. I'm not going to dive too deep into what the actual swap contract is, but just know that this is a simple example of a management expense ratio of 0.11 and a total fee ratio of 0.4. So you are paying 4 times more than you think owning this, unless you actually dug into this. So another one I want to go over, and this is in no particular criticism of each of these individual funds. I just want to highlight to you how the fees can be much different than what they're actually displayed. If we go to the CI Energy Giants, this is a covered call ETF. We're looking here at a management fee of 0.65. It's already high, but it's high because it's a covered call ETF. This makes complete sense. The fees are typically higher because there's a lot more active management. There's a lot more costs involved with covered calls, things like that. However, if we head down below and we look at the ETF fact document and we come down here, we are seeing that yes, the management fee is it's gone up. It's actually 0.72% now, but there is also a trading expense ratio of 0.13. So again, the actual total cost to own this fund is 0.85. And even if that MER was still at 0.65, we'd be sitting at 0.78. So the costs are much higher. However, there are some particular funds that are substantially higher. I'm talking almost double the fees. And for the most part, this will come from actively managed funds. The one I will actually show you here is the Horizons Big Data ETF. So this is a fund that effectively covers data center companies, hardware companies. There's a lot of focus on the artificial intelligence sector in this fund, and it has become a little bit of a popular fund here in Canada. Not necessarily the largest, but it effectively aims to track a particular index that has a lot of rollover and is very, I would say, actively managed. This fund, it aims to track an index that has a lot of turnover, a lot of portfolio turnover, so they're constantly making a lot of transactions. And when we come down here to the actual fund's fact sheet, this one is actually alarmingly higher. We're looking at a management expense ratio of 0.58, and then when we come down to the trading expense ratio, 0.38. So instead of paying 0.58 for this fund, you're actually paying 0.92, substantially higher than the listed MER. Now, some fund managers are relatively transparent about this. It's listed right on their front page. I mean, if we go to this big data ETF, we can see it as the management fee, the management expense ratio, and the trading expense ratio. So it lists all of this right on the front end of the website. The only difficulty is a lot of people will simply head to the fact sheet. They'll come down here, they'll hit the fact sheet, they will come here, they will notice the MER here, 0.58, and that's all they do. They don't dig into the TER, which is actually a fairly important metric. Another prime example I could use would be the BMO covered call ETF. The MER is listed right on the front page, 0.71. If we come down here, we can see the annual management fee and the management expense ratio, 0.71. There's no mention of the trading expense ratio on this page. However, if we go to the fact sheet, again, we're going to scroll down here. We're going to see the 0.71 management expense ratio, and then we're going to see another 12 basis points tacked on for the trading expense ratio to sit at 0.83 in total fees. So some fund managers are more transparent, listing the trading expense ratio on the front of their ETF page. This does not make any of these fund managers shady or trying to hide anything or anything. BMO is an outstanding fund manager, one of the best in the country. They just simply don't list it. And it is your job as an investor to do some more digging and do some more due diligence, because if you buy a fund like this big data fund and you're expecting to pay 58 basis points and you end up paying 90 plus, that is a big deviance in fees. The other one I would go over is some single stock ETFs. This would be the Tesla Purpose ETF. They effectively own Tesla on a derivative basis, and they kind of engineer it to distribute income. So if we look to the fact sheet of this fund, we're going to scroll down. You're going to see a 1.68% management fee, which is ridiculous. And then you're going to see a 0.21% trading expense ratio to come in at around 1.9%. So again, I mean, you're looking at, this is 15% of the total fees of the fund over and above what you think you're paying if you don't actually look into this. And again, if we go to the front page of the Purpose Tesla ETF and we look to the management fee, it actually says 0.4. There's no mention here of any sort of trading expense ratio or anything like that. You actually have to do the digging yourself. Now, where might this not actually come into play all that much? And you can get into this when it comes to passive index funds. And the one I will show you is the iShares X Canada ETF. So this is a fund that covers effectively the entire globe, but what they do is isolate out Canada. So this is a very popular ETF for people who want to passively index the rest of the world, but they want to own their own Canadian stocks. So this is a passive index fund. And if we go down to the actual fact sheet of the ETF, coming down here, we're going to ETF facts. We can scroll down here and we can see that the trading expense ratio is 2 basis points. This is very small. And the reasoning for this is there is very low turnover from a fund like XAW rather than, say, the Horizons Big Data ETF. And I'll show you this actually as an example on Y charts. If we go to XAW, we're going to see a very low turnover ratio. 10%. The turnover ratio would effectively be how much the holdings inside the fund are actually turned over, stocks bought and sold, things like that. Now, when we go to a fund like Horizons Big Data, we're going to see a substantially higher turnover ratio, 80%. So this is exactly why you see a fund like that with such a high trading expense ratio, and a fund like XAW, which is relatively passive, is much less. But the overall objective for me, this video, is to kind of give you some clarity as to what you should be looking for before you go buying an ETF. The fees on the surface on these simple data aggregation websites or even the front page of the fund might actually not be what you are paying, and you need to understand the full fees you are going to be facing when you buy a fund. So before you buy anything next time, head to the website, head down to the ETF facts, open that document, and whether you want to scroll for it or you want to hit Control F on a PC and search for trading, you will find the trading expense ratio. It's listed practically in every single ETF fact document you can get, and you might actually be surprised as to what you are paying. It could definitely go from a situation where a fund looks relatively promising to not good at all because the trading expense ratio is 80% of its MER, which leads to a substantial fee. Now, the one interesting thing you're going to find here is you will often only find this trading expense ratio inside Canadian funds, especially when you look to fund documents. And that is because US funds actually combine this into their MER to get you a total cost, an entire cost of owning the fund. So if you're looking at US funds, if it's a 20 basis point management fee, that is likely what you are paying, because the US funds integrate all those trading costs, things like that, into the management expense ratio, whereas in Canada, those are separate. They're not included, and you need to dig in to the ETF fact sheet to actually figure out how much you're going to pay. So everybody, hope you liked the video. Head down below, like it, subscribe to the channel, drop a comment, let me know if you just learned today what the trading expense ratio is, and if you're going to integrate it into your research next time you do an ETF, and drop a comment on a fund you own that you just realized has a very high trading expense ratio. I'd be pretty curious to see what everybody owns here. And as always, head down below, grab that free report on 3 of my favorite stocks right now. Doesn't take long to sign up, just a few seconds. And as always, everybody, stay tuned for more great investing content.